to Energy Vista, a podcast on energy issues, personal and professional trajectories. I'm your host, Leslie Palti-Guzman. In each episode of this podcast, we chat with energy experts from all around the world. We exchange on timely energy issues as well on their life experience. You will learn a lot whether you are an energy aficionado or a newbie. One of my favorite part of this podcast is the focus on their personal stories. I always find it very inspiring. It's March 13, 2020, and time for a new Energy Vista episode. Today I'm exchanging with Thierry Bros, an energy market specialist with 30 years of experience in policy, industry, and trading. He's also affiliated to the Davis Center for Russian and Eurasian Studies. We will discuss the outlook for the European gas market in the aftermath of the coronavirus, gas policies under the greenest European Commission, and the ever-challenging relationship with Russia, as well as Thierry's unique professional and personal trajectory. Hi, Thierry.
Hi, Leslie.
Welcome to Energy Vista. First, it's hard not to talk about the topic of the day. So let's start with the coronavirus impact on the European gas demand. European gas consumers have been among the biggest winners from the current gas glut and low-cost gas supply. European LNG imports, for instance, have increased in 2019. So what does it mean for Europe that prices are collapsing further? So I think TTF is below $3 per million BTU now. Are we going to see more coal-to-gas switching, or most European countries have maxed out their ability to do more fuel switching?
Okay. Yes. I mean, good low prices are always good for consumers. That's one of the part of the equation. If we go back to 2019, we've seen a demand growth in Europe of around 5%. When I talk about Europe, for me, it's now EU 27. So it's outside the UK is out. And this is, as you stated, thanks to the coal to gas switching that happened in Germany and Spain, something like plus 10% in terms of gas demand in those countries. And are we going to see more? Yes, a little bit. I mean, we still have some room in Germany to do this. And interestingly enough, if we look at Germany, this coal to gas switching happened by market principle, not by policy. I mean, this policy is very, very slow in Germany, and we're supposed to switch off the coal plant in 2038. So this is happening faster. One further element to your question, please remember that if we are going to a Green Deal, and we'll talk to this later, this means that gas is then going to be impacted negatively by renewable, and this is what we've seen already in the UK. So interestingly enough, EU 27 is late, i.e. we are doing this coal to gas switching, while the UK is earlier because they've done the coal to gas switching back in the last 3-4 years and in 2019. And from 2019, what you're going to see in the UK is a gas to renewable switching.
So if I understand correctly and summarize what you said, if the rest of the European countries are following the trajectory of the UK, we'll see in the short to medium term more gas to coal switching, but then gas to renewable switching.
Yes, I mean, coal to gas switching, yes. What I mean, the basic, if you want to do a very simple forecast, go for undulating plateau for gas demand in the EU, coal to gas switching on one side, and then gas to renewable or renewable eating into gas later on.
But we are talking about post 2030, 40 over there?
Well, I mean, again, it's what I mentioned about the UK. It happened in 2019 in the UK. So, I mean, once you have no coal and you're growing the renewable is eating in some what's left of the fossil, and it's the gas.
Right. Except maybe for countries that are at the same time phasing out nuclear, for instance, or another fuel.
Yes.
Yeah. Great. Since you mentioned the Green Deal, is the Green Deal going to be threatened by the coronavirus triggered recession? Because I'm thinking that there might be competing budgetary priorities for the EU in the coming months. Definitely the greenest European Commission we've ever seen, which is fast pushing its goal of climate neutrality by 2050. Could that be put to a halt? Maybe not a stop, but to a postponement?
Very simple and short answer, yes. Yes and yes. I think the European Commission is now having to deal with the coronavirus. They are not gaining neither popularity nor credibility in doing this, and they will come later out of this crisis, I think, as you said, not only with less money, but with less credibility, which means that the EU Green Deal is perhaps already facing a halt.
So, like concretely speaking, what does it mean for gas demand if we see a recovery summer, next winter, next year? Does that change the projections for the outlook of gas demand?
I think what it changes the projection for the renewable, because I mean, I'm still one of the persons that think that renewable needs subsidies one way or another. And once you have low gas prices, low oil prices, and on the other side you don't have any money for subsidies, then it means that the renewable or the efficiency programs are going to be put on the back burner. And what does it mean? It means that what we can expect is that gas prices will recover, and I think they will recover sooner than oil prices, and that demand will not be as low as people are thinking. So, I mean, basically, again, in a short answer, we are creating today the next crisis. We are creating, remember, it's a boom and bust. So today it's bust and tomorrow it's going to be a boom.
You're thinking about shortage of investments on the upstream side, midstream?
I'm thinking about shortage. Sorry, I'm thinking about shortage everywhere. I mean, you're seeing capex being slashed in not only in the US, but it's going to be slashed everywhere. Plus, you're going to have, as I said, less renewable kicking in. I mean, if you have people not investing, it is at the end of the day, we are going to have less wind and less renewable. Plus, again, as you mentioned earlier, we are still in this very strange mindset in France and in Germany of wanting to close down nuclear power plants. And we've closed down one in France in the last few days. So yes, you're creating a shortage.
Yeah. So in the event we recover faster than anticipated, or that we have a recovery and we're going back to our older projections or close, do you think Europe is on an unstoppable march towards penalizing gas imports, or pragmatism is going to prevail? And when I'm saying pragmatism, I'm thinking, well, considering that gas prices have been so low and will probably going to remain low in the short medium term, where like Europe is better off having a diversified set of energy options, including especially the ones that are low cost and potentially less polluting, in addition to all the renewables and nuclear.
Yes, I mean, the Green Deal works if you're rich and healthy. If you're poor and hit by the coronavirus, the Green Deal is put on the back burner, and so therefore you'll need everything. I mean, I think President Macron stated it will cost whatever it costs to save the people and to save the French economy, and so this is the answer. The answer is we will use whatever is available to refuel our economies once we are getting out of those lockdown situations.
So it seems that for investors, it might still make sense to finance new gas interconnectors and regasification terminals.
Yes, but two things here. First, they have to be adults in this, and they have to understand that they can't have any public money or any subsidies any longer. And we've seen at the European Parliament some big argument about what we call the project of common interest. I think investors should really say that all energy must compete on a market basis, and so therefore there shouldn't be any public money. And in fossil fuel, it's not possible any longer.
Right.
Again, the
So
question about
just to clarify for everybody, PCI list, the project of common interest, is a list of projects that the European Union select that will get money funding for feasibility studies or applied also to the construction of some European regasification terminals and interconnectors. So we've seen an evolution where there has been less gas projects selected and more electricity projects. But the latest list that was released end of 2019 was very controversial in the context of the European Green Deal, because some voices have been saying, why should we keep financing some fossil fuel projects and being facing the risk to be locked down into a multi-decades investment that we're not even sure will be utilized?
Absolutely, and this is what I was alluding. I think the investors must understand that they can't go to the European Commission or the European Parliament and ask for subsidies. So then they'll have to do the math
So
about.
do you think this latest list is at risk, or it will be for the next one?
No, I think this is not going to be financed with public money any longer. And again, it makes completely sense. I mean, if we want to have a Green Deal, I mean, the first thing is to stop subsidizing what doesn't need to be subsidized any longer. So I think it's back to investor to do their math. It's going to be more difficult, but expecting public money to do some project is basically impossible.
I mean, that could put at risk the Croatian regasification terminal, the regasification terminal potentially in Ireland, some interconnectors in Central and Eastern Europe. Do you think that could cancel even their project?
Well, as I said, those projects will have to be fully market based, and if they need some public money to achieve FID, then the answer will be they will not achieve FID.
Very interesting.
Remember, on at the EU level, it was very difficult. It's basically impossible to change the list in the parliamentary process, because then you need to change all the lists. So this was just basically impossible. But it is possible for the European Commission at the next stage to say yes or no to each project on the list. If you're on the list, it doesn't mean you're going to get money. If you're not on the list, you don't get money. But if you're on the list, you may not get money. And what I'm saying is, if you want your license to operate to still be valid, I don't think it's a good position to go and ask for some money there.
Right. It's going to be very, very interesting to watch also the parallel in Southeast Asia, because countries that have been very hardly hit by the coronavirus also, and their economies are projected to maybe turn into recession or lose a few points in GDP, like South Korea, Japan, have, in recent months, years, announced targets to finance some regasification terminals and other projects in countries in Southeast Asia. It's going to be interesting to see if they are still going to do so.
Absolutely. I mean, I really think that we are facing an unprecedented situation. I mean, policymakers are struggling with addressing this. And as I stated, I mean, the European Commission is not ahead of the curve in here. I mean, look at where the help came when Italy was in an extremely difficult position vis-a-vis coronavirus. It didn't came from any European country, nor from the European Commission. It came from China. So I think we are really facing some difficult time in Europe, and at the end of the day, the credibility of policymakers will be impacted by the coronavirus and the way they solved or not solved the crisis well.
Yeah, hopefully we won't see another populist wave in the next elections. So to move to the pricing and market share question, we see a price war on the oil side between Saudi Arabia and Russia. And similarly, in Europe, we've been saying for a couple of years now that Russia has been on the defensive to try to kick out the US LNG from the market in order for Russian gas, both pipeline and now LNG, to grow or at least keep market shares. And in 2019, interestingly, the main regional destination for US LNG was Europe, with about 40% of US LNG going to Europe, compared to 37 to Asia. So in the new pricing environment, who is going to hurt most, US LNG or Russia?
Yes, allow me to go back a little bit in time because I think this question is fundamental and is also will also help your listener to understand what's happening in the oil. Back in 2012, we had post Fukushima, we had higher prices in Europe that were not warranted. Why? Because Gazprom at this time was saying, well, if gas prices are high in Asia, then I should make sure one way or another that my prices, my pricing power in Europe allows me to extract higher prices in 2011, 12, 13, 14. When you're doing this, you're de facto giving a green light for a new project in the US, new FID of LNG project in the US. And they've done this. Perhaps they were not thinking this will happen. Perhaps they were dubious about shale gas and shale oil revolution. But at the end of the day, it's exactly what you've described. We are now facing a competition between Russia and US LNG, which could be viewed as a price war or a market competition. And remember, I think I was one of the very few who wrote about this back in 2012 when I published my book. The interesting thing here is that if you're Russia, you have to rethink the whole position. Yes, you sold your gas expensively in 2012, 13, 14, north of $8 per million BTU, but today you're selling it at $3 per million BTU, and so therefore it is hardly profitable. It's still profitable because you're the low-cost producer, but it's still hardly profitable. And so the question for Russia, and this question is valid for both oil and gas, is how to do the maximization of the rent in oil and gas. And I think they've discovered with this real example of gas that, well, it's better to fight before than after. And so therefore, what we are seeing here with the price war in oil is to try to deter some kind of investment in the US to be able to avoid a price war later on. And this is what they are doing right now. So what are they going to do in gas going forward? Well, I don't think it's really the kind of price war we are seeing in oil. If you go back to what Gazprom is saying, if you go back to what Gazprom is doing, Gazprom today doesn't want to have a European market share above 40%, I think. Because if you're above 40%, then you may face some kind of inquiries, antitrust inquiries, etc., etc.
Political backlash. Mm-hmm.
Yeah, exactly. If you're below 40 and above 35, you're safe and you can have a nice market share. And this is exactly where they are, and this is exactly what they are doing. Interestingly enough, if you're looking at the kind of swing and who swing the production, because as you alluded, we had growth in 2019, but we had also a very warm or mild, perhaps even warm winter right now. And so therefore people need to swing as a supply. Gazprom is swinging supply, is reducing supply, as well as Norway. And you're hearing some LNG cargoes in the US not being taken. So I think it's not a price war as you see in oil. It is a different way of doing it, because everybody is suffering with those $3 per million BTU. Every producer is suffering, not, as you said, consumer.
Yeah. So since the advent of US LNG, something I've been noticing too is that the Russian government, Russian companies, Russian media have been really good at using a dual strategy to destabilize US LNG by convincing Europeans that, one, US LNG is too expensive, and two, it's too dirty. Are they correct? And are they going to succeed?
I wouldn't say it's what they are doing because maybe I have a different view, but at the end of the day, you're right. This is what some policymaker in Brussels think. It's too costly and too dirty. So let's try to look at those 2 points. First of all, it's what I always say to policymakers: you shouldn't care. The cost is not your problem. We have a market in Europe. So everybody that wants to compete at 3, at 4, at 5, at 6, at 7 can come and compete. So at the end of the day, the cost is not something that matter to the consumer in Europe and shouldn't matter to the policymakers in Brussels. But again, as you stated, it is in the mind of the people. But at the end of the day, one of the big achievements of the last few commissions was this ability to create a market and therefore for producers to compete in the European market. And so at the end of the day, it is, as you stated, the TTF, and the TTF is whatever the price on the screen is, and everybody does this. So now the second question is dirty. And yes, I'm sitting in France, a country that has banned fracking. And so the question is, how dirty is it, and how dirty is it vis-a-vis other fuel? And here I wrote something for Harvard saying, yes, you have two ways of addressing this. One is what the EU Commission was thinking prior to the coronavirus, is to look at the dirtiness of each kind of production and therefore to price, to put some kind of external pricing, some taxes or whatever, to be able to say, well, your gas is clean, so it comes without taxes. Your gas is not as clean, and so you have what we call a WTO compatible carbon tax border adjustment. The interesting thing here is that this is very, very, very difficult to do. I was a civil servant back many years, and we were already talking about this in France. So, I mean, it hasn't been achieved. And so, therefore, my recommendation was to say, well, let's set some kind of target in terms of methane emission, in terms of, and then say, well, every gas that meets this target then can come in Europe, and every gas that doesn't meet this target can't come in Europe. And this is allowed under WTO rule as long as you follow those own rules in your own countries. So it's again the WTO compatible carbon tax border has been postponed to 2021, but this was prior to the coronavirus. I think this idea is already dead.
Very interesting. I've been writing also about this topic to clients, and we're definitely heading, maybe, we'll have to wait a little bit more post-coronavirus, but into a world of greater scrutiny on the life cycle emission of natural gas, looking at all the different components of the value chain and how much emissions there are, from sustainable frac gas to shipping responsibly. So there is some opportunities maybe for Europe and the US to come together in framing a coherent narrative and coherent guidance and methodology on how to proceed. But there is also potentially some trade disputes looming, or disagreements. So it's going to be very interesting to watch.
Well, I think it's more an agreement between Europe and gas companies, because at the end of the day, if major gas companies follow abroad the EU regulation, it's done. And again, we've seen more and more companies coming and sharing with their shareholders their kind of targets and their kind of results in terms of methane leakage, methane emission, and we are going to have satellites that are going to be able to measure this, and so therefore to audit this. So I think it should be easy and much easier than a WTO compatible carbon tax.
Mm-hmm. Yeah, I think the rollout of most of the Obama era regulations may have inflicted a damage to the green brand of US LNG. But at the same time, most of the big companies, as you mentioned, are going to upfront actually put in place stricter methane rules for themselves. And, like the methane guiding principles, for instance, many companies now are following this. So I think it's, despite what the US federal government is doing, companies know that it's in their better long-term interest to actually self-discipline their methane emissions.
Absolutely. Plus, you're going to have some kind of M&A and concentration, so it will be in the hand of the big companies, and so therefore it's going to be easier.
Yeah, absolutely. So Thierry, let's move to your personal and professional trajectory. So you've been many different things in your life so far, and it's not over. So you've been a public servant. You worked at Tellurian, which is a US LNG company, developers. You've been working for Société Générale, a French bank, in the research, or also some trading. How did you get there? Were you born and you knew that your field would be natural gas? How did everything came around?
Well, I was educated in a French grande école where physics and chemistry was the major topics. And so therefore, after this, I would say naturally I moved into a research center state-owned in France that was dealing with oil. After a few years, there is always a position of advisors to minister that is in the administration. And so therefore I was lucky enough to get this position as advisor on the administration side of the energy minister, which is in France, the economic minister, and in charge of security of supply for oil and gas. I needed to liberalize the gas market. So I was in fact an oil I had oil knowledge, and there I moved my knowledge to gas. I had to liberalize the gas market in France. We were late, and I was one of the member states, representative of the member states that negotiated those directives about the liberalization and the market principle of the EU's the second package. After this, once you've done this, and you've put the power in Brussels, there is not much left to do in Paris, so you have to find another job. I'll move.
By the way, is the French government still publishing the notes like you were the market research notes? No. Okay, so it's done in Brussels. Yeah.
Yeah, exactly. Exactly. We decided, you're right, Leslie. We decided when we wanted to do this to put some research in it, and so therefore we researched on it and we published it as on the government web. As you said, it's now done in Brussels, and it's done for the 27 member states, which is absolutely logic. I mean, if you want to have a big market, you have to have an integrated market. After this, I was hired by Société Générale to be an equity analyst following gas stocks. So it was a very interesting time because I've survived the financial crisis there, and I've survived also the energy crisis there. So it was very interesting to look at those companies and to understand that back in those years, the utility business model was going to suffer as it did massively in those few years. After I was asked to restart the European Research Energy Center for Société Générale. So we were two analysts dealing with oil, was done in the US, but gas, power, and CO2. So we had a climate knowledge. If
I can interrupt here, what is your thought on the market research published by banks? I know in Europe the future is maybe bleaker, but what do you think?
Well, I joined the bank because the research at the time was quite valuable because it was viewed as best in class, I would say. The interesting thing is, I think the financial crisis changed this, and the most of the banks are reassessing reassessed their research center and their research capabilities, and also the MiFID II EU regulation that is forcing the client to pay for this specific research have changed the business model. I'm not reading bank research a lot because I think that as a researcher myself, we have to be completely new and have new ideas. So if you read all your competitors' research, at the end of the day, you just cut and paste.
I agree.
But I think that, and this is why I left Société Générale, by the way. I think it was also time to go back into academia, because the research, back to your question, all kind of research, be it bank research, academia research, or think tank research, needs to be compared. And so therefore you have a problem when you're doing some kind of research and it's not public. You can go in dinners and say, well, I've said this before, but I've never published, or you can't have access to my paper. I think that if you're in academia, you have to live with your papers. And so therefore, I think it's also an increase in credibility.
And what about the question of independence?
Well, in my life, I've always used to be very independent. So I know when you have a sell recommendation on a stock, the company doesn't like it, but I really didn't care. And again, I was one of the very few analysts that thought that the business model of utilities at the turn of the last decade, 2009 and 10, was going to be severely impacted, because I was one of the few who saw the efficiency gain happening, and utilities didn't like me, but I really didn't care, and I still don't care.
Okay, so after the bank, what happened?
And then I left to do half academia and half consulting. I was for Oxford for 3 years. And again, the paper there are public. So, and I'm happy to say that in those 3 years, I didn't publish anything that today looks stupid. So it's good because it's publicly available, and people can check. And again, it's also why even when I was in the bank, I asked the bank to publish a book, because I wanted my publication to be available for everybody to check. And after I've worked for Tellurian as VP Research, and also with the Harvard, and now I am on the consulting phases, looking at what clients are needing. But again, I want always some kind of public research to be available for clients and for everybody to look at and check.
Very good. Well, thank you, Thierry. It was a very lively, interesting conversation to be continued. Many things are going to be upset in the coming weeks, months, the pandemic, but we're here to help everybody understand the markets. So here we are. So that concludes our Energy Vista podcast, which was recorded on March 13, 2020. This is Leslie Palti-Guzman saying good day and good luck.